Elon Musk needs no introduction. He's not only one of the richest people in the world, but also one of the most influential characters in Silicon Valley. Last year, while the entire world was shut down, he saw his net worth skyrocket by over $100 billion, setting records in wealth accumulation. And that's mostly as a result of the significant rise of the electric vehicle trend, which has taken the Wall Street by storm. Last year alone, Tesla's share price exploded by over 600%. The EV giant surged past some of the United States' most influential companies including Walmart, Visa, and JP Morgan. Tesla's market capitalization is now sitting at just over $500 billion. Therefore, it makes sense that Tesla's success has paved the way for the rest of the industry as well. From charging infrastructure and battery makers to EV tie-ins, the electrification of everything is well underway. However, this exciting new industry is still in its infancy, and there are a few up-and-comers which could see returns on par with Tesla in the coming years. In this video today, we're going to discuss 3 of our favorite electric vehicle industry plays which we think are still flying under the radar in 2021. So, let's get started. Number 1. Blink Charging. Last May, Blink Charging was trading just over $1.5. However, the run-up in electric vehicle stocks has sent this infrastructure play flying. In about a year, Blink has seen its share price skyrocket by 1,996%. An astounding value indeed. But it's possible this could just be the beginning. Here's the thing, investors are betting big on the future. The story of the stock goes something like this. If you build it, they will come. And it's still in its first act. Blink is building an electric vehicle charging network, and it has an explosive potential. Right now, Blink is caught in a positive feedback loop. The bigger the EV industry becomes, the more is the potential Blink is going to have. Many experts recommended this stock when it was trading just at $10 a share, and they're doubling down on the infrastructure boom. Why? Because US President Joe Biden is closer than ever to sealing a multi-trillion-dollar deal that will prioritize homegrown renewable energy infrastructure. Well, currently in the United States, there are only 41,000 EV charging stations, and the system is almost comically broken. This is one space that Tesla absolutely dominates. It runs a supercharging network which is second to none. However, for non-Tesla owners, there's simply not enough options. But this could be changing. Over the next 10 years, President Joe Biden is planning on spending billions of dollars to increase the total charging stations in the United States to 550,000. Just for a little bit of context, there are only about 150,000 gas stations in the United States now. It seems pretty ambitious to get it to 550,000, right? Well, in addition to Biden's plan to ramp up infrastructure development, the president is also looking to replace the entire fleet of government vehicles with electric ones.
The federal government also owns an enormous fleet of vehicles, which we're going to replace with clean electric vehicles made right here in America by American workers, creating millions of jobs, 1 million auto workers.
That means the pressure is on to get this infrastructure locked and loaded. While there are some private charging initiatives like Tesla's already being rolled out, they are unlikely to benefit from Biden's ambitious infrastructure push. Chris Nedler, manager of carbon-free mobility at the Rocky Mountain Institute, explained that public money should only be spent on sites that are available to the public. And according to him, that's certainly true for this Biden infrastructure spending plan. Therefore, even though Tesla's supercharger network has turned a lot of heads, the real explosion is yet to come. And Blink is one of the few companies that already has an edge in this looming infrastructure boom. Number 2. Face Drive. Our world is changing, and that much is certain. The largest transfer of wealth in history is currently taking place. And amidst all of this, companies are being forced to adapt or die. Millennial money is pouring into the stock market, fueled in part by zero-fee trading apps. And in the future, the most successful businesses might be those with a focus on technology and green energy. We are of the opinion that Face Drive in particular encapsulates these demands perfectly. It's the tie-in of the tie-ins because it has built an entire ecosystem with connections to the EV industry. From ride-sharing to carbon offset food delivery, Face Drive has managed to capture 2 rapidly growing segments under a single umbrella. And it hasn't stopped there. Face Drive has already reimagined ride-sharing, providing a cutting-edge carbon offset alternative to the giants of the industry like Uber and Lyft. But right now, they're also looking to challenge the notion of car ownership as we know it. You've probably seen the headlines talking about how millennials are not as car-crazed as baby boomers or how they've turned their back on car ownership. Well, Face Drive did. They saw this coming a mile away. With its acquisition of Steer, a subscription-based electric vehicle business, users can order a Tesla, Porsche, or Audi electric vehicle that will be personally delivered directly to their doorstep. Well, this does not just mean you can enjoy the quality and luxury of these top-tier brands, but you can also drive a fully insured electric vehicle when you want it without having to worry about buying an asset that loses most of its value as soon as you drive it off the lot. It's brilliant. This simple concept effectively allows users the ability to lease any number of vehicles without committing to one specific car or paying an outrageous upfront cost for it. This is probably how most people will drive a Tesla in the future or an Audi e-tron. And this is an important development. Younger generations just aren't interested in owning many things. Take subscription services for instance. They've seen tremendous growth in recent years, from fashion and hygiene to media consumption and even housing. It is now clear that new generations want convenience, freedom, and variety. This is the subscription economy, and the numbers speak for themselves. Netflix, the de facto leader of the subscription boom, is currently sitting on a $200 billion market cap. Selena, an international subscription-based co-working and co-living empire, has raised nearly $1 billion in just a few rounds of VC funding. Ipsy, a beauty box subscription service, is pulling down more than $500 million in revenue every year. Even the popular dating app Tinder saw its subscription revenue soar to $1.2 billion in 2020. There's a subscription for almost everything, and FaceDrive has positioned itself to fit in the middle of the booming new business model and the electric vehicle market, which is set to grow exponentially in the years to come. Number 3. Fisker. Fisker is a fairly speculative play in the electric vehicle world. As a matter of fact, it won't even begin manufacturing its electric SUVs until 2023. But that does not mean it's not a company to look out for. It's probably one of the most reasonably priced electric vehicle stocks on the market. It's a slow burner that is quietly sealing massive deals while doing its best to stay out of the limelight. And in the market filled with overblown valuations fueled by a hype machine that just can't quit, Fisker is a breath of fresh air. Fisker is also a story stock that looks a lot like Tesla did in the early days. Citigroup analyst Italy Michele recently picked up coverage on Fisker with a buy rating and a price target of $26. Michele understands the narrative here, reminding investors that as a pre-revenue company, Fisker is obviously a high-risk investment proposition. However, there's a big reason to be bullish. Fisker has 4 long-term advantages here. Number 1, it's making an SUV, which according to Michele is a good segment to start. Number 2, it's got a strong brand. Number 3, it's got a legacy behind the wheel. Henrik Fisker is Fisker's founder and is a legend in automotive design. And number 4, it's a massive saver of capital because it has an innovative asset-light approach, getting Magna International to assemble its first vehicle. Currently, Fisker already has 9,000 advanced orders, all of them prepaid. Eventually, when the company comes out with its first Oceans SUV, it will be at exactly the right time and at a $40,000 price point and a super flexible lease setup, which could be incredibly disruptive. Alright guys, those were the top 3 hottest electric vehicle stocks for 2021. What do you think? Do you think we missed anything? Do you know any other EV stocks worth watching in 2021 and being bullish about? Let us know in the comments below. Please leave a thumbs up and share the video if you found it to be useful. For more content like this, subscribe to our channel and press the notification bell to never miss an upload. See you guys in the next one.